Hello, everybody. Welcome to the Analyzing Finance with Nick live stream. We got a special one and a fun one today that I've been wanting to do for a while. It's the Debunking the Doomer live stream, where a lot of you have asked me about um, debunking the doomer and to do more debunking the doomer content. And for you guys who aren't familiar with how debunking the doomer works, and I recommend you check out the playlist of Debunking the Doomer for reference that I have on this channel. It's the idea that basically there's a lot of common doomer narratives, particularly among millennials and Gen Z. And I try to go and find the strongest counter argument and present it and explain why the doomers are generally wrong. And the doomers are generally wrong. There's one notable exception, which you probably already know which one it is, given the theme of my channel, but I'll go into why that is the case, but it still doesn't disprove the whole premise of debunking the doomer. And as a result of that, what's it called? I will go through first the debunking the doomers that you guys requested in the comments beforehand to the post that I mentioned this. And then after I address those, I'm going to leave it open to the audience. You guys write your doomer narrative in the comment. If there's a doomer narrative that you want me to debunk live and challenge me, feel free to write it in there. Um, I know that the comment section gets very popular on this channel. So if you want to make sure that your comment gets answered, please leave a super chat. But I try to find as many of them that are interesting and obviously not trolls. And what's it called? Let me just get you guys the link to the playlist. So if you have for context here, and then I will get started. So here's the Debunking the Doomer playlist. And now the first Debunking the Doomer that I've been asked for is question. You are only positive because you have income from YouTube. Okay. Um, First of all, you should watch my video why you should never be a YouTuber, because even if we're a bigger channel, which it's kind of crazy to me to say that I'm now a bigger channel, but a bigger channel like mine, the debunking the doomer, narrative for YouTube is that, you know what, YouTube is not really a large source of income unless if you take a lot of sponsorships. And as you know, my channel doesn't really take sponsorships. I mean, I possibly open to it for the right circumstances, but I'm generally hesitant for a number of reasons. And so as a result, the revenue I generate from YouTube is nice and it's a nice supplement, but it's not what people could live off of. So I don't think my whole worldview has changed overnight because of you what's it called? Because of YouTube income. I'll be right back in a second. I just want to mute my phone so it doesn't keep going off and annoying you guys. All right, now I'm back. And let's go back to the next question I have. All right, the next one is that the plan to put cameras in cars, homes, and every large object, and the shift the option to not owning anything makes me doomerish. Okay. First of all, the idea of like being in a giant surveillance state is a concern. I've been to countries in the world that actually are surveillance states, and they are quite spooky, to be frank. But America is far away from that. First of all, I think most of these cameras have the option to turn off, or whether legally or through a hack. So if you really are that concerned, or you can just buy older cars or items that don't have these things as well if you want to work your way around that. Also, you have the other thing when it comes to the risk of a surveillance state is that a lot of states mostly are two-party consent for recording of any kind. So that's also a counter argument to that. And the other thing really is that I think it will actually help a lot with these cameras and things in a lot of ways. First, it will determine like what accidents, like if you're in a car accident, what's at fault versus what is not at fault. And as a result of that, um, you can have less risk of insurance fraud and find people who actually are at fault of things. And as a result, the overall allowance for doubtful accounts for insurance companies will decline and insurance will become more affordable. You will have less room for fraud and other things as well. I think that's more the purpose of the cameras is to protect from insurance fraud more than to spy on the actual users because the cameras point out, not in. Um, yeah, I mean, and also the other thing too, the ownership thing, which I think is the bigger doomer claim here, that you're going to own nothing and be happy, like the World Economic Forum guys say. Um, I could see where that concern is because the way that the housing market has gone in very many big cities, but the ownership option is there. And I've talked about this in my video that there's more to own in a house, but even if you want to own a house, most of you guys probably could buy a house tomorrow. It's just not in a place you actually want to live. Um, like you have this big bifurcation between housing where it's affordable, which is most of the world, even in the developed economies such as the US, versus the cities that actually have jobs and where people want to live and work. Um, I think people prioritize living in these cities more than buying a house. And I think the politics and the demographic factors for supply are going to become more positive. The combination of boomer attrition, both in terms of them occupying less properties or being forced to sell them, um, their states being forced to sell them for various reasons, or changing politics, like the loss of NIMBY voting block due to boomer attrition, means that you'll have a lot more permissions for development in the future, which will increase the marginal supply. And you'll also at the same time supply open through a smaller succeeding generation trying to replace the boomers. So there's a good, and I think it's a bipartisan thing because even on the left, which is historically the most anti-growth development side of the US political aisle, has had a book written by Ezra Klein called Abundance, which goes into like a more progressive leaning argument for supply side economics. So, yeah. Okay, thank you for the super chat. Another common doomer narrative is you can't vote your way out of this. An extreme reaction to politics they don't like combined with seeing such a waste of our tax dollars. Okay, so the doomer argument there is that the system is so institutionally corrupt but yet all powerful at the same time that you cannot do anything about it. All right. I would say really the argument is that if at least in the US, I can't really say this for other countries, but in the US, if the problem is bad enough, you will be able to vote your way out of it. Like a good example of this is actually what's going on with immigration in the US. Like you had both parties in 2016 try to have like a open borders pathway to citizenship type candidates, and Trump beat both of them. And I think this was one of the reasons. I think this is the main reason why Trump even made it out of the Republican Party primary. It wasn't because of some unique cult of personality or his master genius or anything like that. It was simply him until it was too late. He was the only candidate in the field who was willing to take a strongly restrictionist view on immigration. And that is and the fact that despite the whole system on both sides of the aisle didn't want this guy in there, for better or worse, what people think of him now, but this was the narrative back in 2016. Um, he still got in because enough of the American people were just sick of um, excess immigration and other issues driving his candidacy, but it's mainly immigration. Other examples would be like these data centers. Like there's this whole controversy, like the governments of the world, and the US particularly, want to build these data centers. And they want to build them in small towns where land is cheap. However, you have seen a lot of incumbent mayors and city councilmen and county board of supervisors members getting voted out of office or even primaried all over the country because the people do not want these data centers. Even though local government wants them, the state governments want them, the national government wants them, the tech companies want them, all the powerful people want them. And they're probably a good thing in the long run to have, actually. I mean, I know they increase electricity costs in the short run, but you can increase power supply. You can build more power plants to catch up. There will be a lag and cause some short-term inflation, but there is like that supply can be absorbed. The energy demand can be absorbed, but the people clearly do not want them in a lot of places in America. And so as a result, they don't, they've voted, and it shows it makes a difference. And then there's also other ways that people can vote and make a difference other than even the ballot box. A lot of people vote with their feet by moving from one state to another. A lot of people vote through their consumer habits or choosing not to do certain things. And so like, I think that the average person, I think, has a lot more power in a lot of these things than they think. It's just that lives for most people are very comfortable. And so they're not willing to, the cost of them going out of their way to do what they need to do to actually have structural change is greater than the benefit of not doing anything and leaving it the same. So yeah, that's my take on this idea. And I do think generally the government wastes tax dollars. I think that's a doomer take. That's just kind of common sense. All right. So thank you for the super chat. Let's get back to some of the other doomer questions I had. Inflation and the national debt is out of control, and the US dollar is heading towards the same future as the German Deutschmark in the Weimar era. First of all, it comes to hyperinflation, which we need to have like a good definition of what hyperinflation is. Hyperinflation is the idea that you have 20% or more a year of inflation compounding for what's it called? For at least a point that you lose half the currency's value in less than 3 years. I mean, I'm not sure if that's the exact technical definition, but it's close to about that point that your currency will your currency. Yeah. So, and not in terms of exchange rate, I'm talking about purchasing power. Like the purchasing power the inflation, consumer price index doubles in a 3-year period or less. And usually that is caused by more of a political crisis than an economic crisis. And in Germany's case, it was because they refused to they refused to pay their reparations debts, mainly because they couldn't, because they were unbearable. And so in order to kind of follow the rule of the law, but not the spirit of the law in terms of paying back their Weimar debts, the German central bank just printed the money to cover it. And when things started to spiral, they just kept printing money to cover the spiraling costs of the government from the inflation until it just took a life of itself and became a disaster. This is the same thing that has happened in places like Turkey and Argentina. It's when you have economic populism, you make all these big promises like, oh, I'm going to make sure everybody has like a minimum level of pension. And then the government can't really afford that because they don't generate enough tax revenue to command it because the economy isn't strong enough, or people, or they try to raise taxes to a level that consistory, and the wealthy just move their money elsewhere. And the result is the government tries to print money to cover the difference, and it blows up. And it usually blows up because all this hyperinflation money printing starts through direct cash transfers, whether it's direct cash transfers to the consumer or direct cash transfer to another government or a creditor. And you can't squeeze blood out of a turnip. You can't have something come out of nothing. And the cost that we ultimately pay for that is inflation. Inflation is a tax. I agree with that sentiment completely. It's the hidden tax. Where I disagree with the sentiment is that hyperinflation is inevitable in the U.S. I think the most likely outcome for the U.S. For inflation is that you have higher than average inflation, but not bad enough to be like the 70s. I think not my worst, but like if I had to say like the median scenario is like inflation averaging about, I don't know, 30 to 40% higher than normal. So like if you had a 2% regime, it'd probably average to like, I don't know, 3.5 to 4. And I think that the median bad case scenario, so like the one standard deviation to the left, not quite the left tail, would be like a 5 to 6% inflation average for a decade. So like half of what the 70s was, which that's a very plausible outcome. I'm not saying it's the base case outcome, but I think it's a bigger risk than the market and a lot of individuals in policy circles are pricing. And before I get too much into economics and the markets and investing, I got to have a disclaimer. Nothing in these videos is investment advice or on this live stream. Please do your own research for making any investments or find an advisor to help you. If you have any specific questions about your money or personal finances or investing, feel free to reach out to me directly through my consultation form. I cannot take those kind of questions on a public platform like this. So that is kind of that's my disclaimer. But back to this. When it comes to the inflation risk, I think it is real. And this was even before the Iran war. The risk is that the Fed cuts rates too early due to political pressure and needing to refinance the government debt at a lower interest rate to keep deficits under control. And also that housing is structurally undersupplied due to mostly government driven restrictions. That would have been enough. Like the choke point for inflation in this era is not energy or food like it was in the 70s. It is housing and healthcare. And the reason why those have artificially low supply is because the government causes them to have artificially low supply. Basically, anything that's going up past the level of inflation is usually due to politics or political interference in that market. But let's see. I got a super chat here. What were some of the standout observations on the comparison between the standard of living in Australia versus the US when you visited? That is a good question. I would say that the biggest difference is that it's a lot more comfortable in Australia to be like a middle class person with more modest ambition than the US. Like, I think if you are making like between say like 60,000 to like 125,000 USD, so like in Australian dollars, maybe that's like 100,000, 90 to 200,000 Australian dollars. Your quality of life is better in Australia than in America. Housing is very expensive in Australia. It's priced like American markets, yet despite them having much lower salaries than we do. But everything else there is a lot more affordable than the US. And they have a much higher social trust society. Like, I feel safe walking around at night in a downtown Sydney, like I wouldn't say walking around in downtown Los Angeles. You also have like resort, like in Brisbane, I saw like a resort like swimming pool right across the bridge of the river from downtown that had no tickets, no gate, no security guard, just in a mock beach, heated pool, water slides, all of that in a public park available to everybody. If you had that in America, it'd be vandalized and completely destroyed within 24 hours. Whereas there, you can have that because society's high trust that public goods don't just get demolished or destroyed like they would in America. Um, so that is my take on Australia. Like, however, if you really want to make it big in Australia, especially as an entrepreneur, it's harder because your whole country is about the same population as Texas. So even if you have a nationwide business, your scale is a lot lower than it could be if you were in America. And then the taxes in Australia start to get a lot more punitive once you break like that 200,000 Australian dollar level compared to the US. So like the tax difference between it's a little bit higher in Australia for middle class people than America, but the difference isn't enough that um, the quality of life differences and what the government does do to help you that's a little more there is worth maybe the extra like 2 to 3%, but that gap starts to widen for higher income people. So if you're really trying to make it big as an entrepreneur or a more higher income professional, you're better off in the United States. I did a whole video about this a few months ago, like what country is to live for each social class, and that was kind of um, my take. Um, and so, yeah, that's also Australia is way more laid back. Things just move slower there than the US. Speed limits on all the highways are probably about 10 to 15% lower than their equivalents in California. Um, People like are just more laid relaxed about being showing up on time to things than the US. There's not as much of a sense of urgency there in the business world or just like in the individual world to make things happen, I would say. So another thing. If people want a more laid back life, Australia is great, and I love Australia as a tourist. I want to go back there probably. I don't know, every 5 to 10 years or so. If it was closer, I'd probably go back more often than that. I think Gold Coast is particularly fun, especially if you have kids. And I like Sydney too, but I'd like to check out Melbourne next time I go to Australia. And if I have enough of you guys want me to speak in Melbourne, I could plan an event there in the future, as well as maybe going back to Sydney and the Gold Coast because I really enjoyed my time there. It's a great place for tourists, especially it's the same distance as flying to Europe for somebody who lives on the West Coast. So it's not that much different in terms of travel time. But now I got a little bit off topic with Australia. Let's kind of get back to inflation. So when it comes to inflation and it's basically the cost of inefficiency, and the government being inefficient is the biggest source of inefficiency in our society. Um, so that is, and a lot of the middle class in America is jobs in healthcare and in government and education that are not productive enough to justify their salaries, and they're kind of in part of the built-in inefficiency in the system. And so you keep running all these inefficiencies, and you have the government is not going to default on its treasuries. We've already paid for the debt through money printing. Um, and so as a result, it's just a matter of how long does it take to show directly in the inflation numbers. It showed really quickly in the pandemic because it was a direct money transfer. Whereas QE, it was slower and more gradual because that money went indirectly into the system through banks and lending and not directly into the system by giving people transfer payments like we did with the COVID stimulus checks and the extended unemployment benefits. So, and that's that. So the transmission means also shows it, but I think you're going to have the outcome is that the national debt won't be a problem. The problem is and this is the risk that is the real risk of the whole inflation thing is how will the American population handle structurally higher than normal inflation? You can gaslight people about it and lie about the problem. And I've talked about that in a video that I did recently about are the inflation numbers accurate or not? And I think they are miscounted probably by about 30 to 35%. And if people, will society still be stable and high trust enough to function in a world where you have structurally higher rates of inflation? If the answer is no, then that's the real doomer problem, not the debt itself. And I think, again, we'll probably have to have, I think this will eventually like resolve itself. And then there's the upside potential of AI productivity and technological advances are good, that the real economy grows enough, it actually might alleviate some of the debt problem. I don't think it will entirely erase it, but this is exactly what happened in the 90s. It wasn't that Clinton was a fiscal genius, it was that he was reasonably responsible, along with the fact that you had a surge in productivity from the internet and resulted in the economic boom in the 90s. And that brought down the deficit to a surplus and had a lot of the fiscal problems that people worried about in the late 80s and 90s get resolved. So you have a combination of more productivity growth from AI and a little bit more, some more reasonable level of fiscal responsibility from the government. We could get out of this, but we'll see. All right. Thank you for the super chat. I'm a Medicare and life insurance salesman. I was told that insurance is recession proof and stable job if you have long term. What are your thoughts? Medicare, I think, is at risk of being structurally insolvent, but that I think, again, would be paid for through inflation and not necessarily through Medicare being shut down. I think that life insurance actually does, I think, have a potential risk. And that is the fact that you have the demographic factor, that a lot of the policies of older people who have bought whole life policies are going to be dying, and there's going to be less younger people contributing to their policies. I don't study the balance sheets of life insurance companies closely, so they might have mitigated this already. And Japan had a problem with this with their life insurance companies. Also, a lot of the life insurance companies are invested in private credit, and particularly in private credit that might not be as safe as perceived when they bought it, to help make up for the fact that the life insurance companies need a certain yield to pay out on their policies. So I think that might be the risk, is the main risks for life insurance are their private credit investments, and or the fact that you have a demographic inversion in terms of payouts versus younger people buying policies. And the main driver of people buying policies, I know, because I'm going to have to probably renew a life insurance policy pretty soon, is when you get married and have a family. And if less people are getting married and having families, then you don't really need life insurance, because if I buy life insurance as a single person and I die, yeah, I might go to like a family member of mine, but that's kind of a waste of money. The main reason to have life insurance is to protect your immediate family, whether it's a spouse who's not working and needs to supplement the fact that you're not around to provide for her, or it's that you have kids that and you want to make sure that their college is paid for and they have a good life if, God forbid, something happens to you before they are finished with school. So yeah, that's kind of my take on your question. But I think in the short term, I think they're stable. I think Medicare particularly. I think Medicare supplemental insurance is going to be in more demand, because I think Medicare is going to have to probably offer less to keep itself solvent, and there'll be room for private sector to make up for that. Life insurance, yeah, we'll see in the next recession what happens to life insurance companies. Next question, back to so I talked about the inflation thing. The next doomer question that I got from you guys is, it's continuing getting worse for non-affluent men. If you are a young man born after 1980, that includes myself. I was born way after 1980. You basically had a worse life because 2007 was the last good year socioeconomically before the slide into political maliciousness, degeneracy, technical dystopia, and a loss of purchasing power. Um, so, yeah, I mean, that's kind of your question is basically that's my answer really to that is that there's the opportunity set is still there. It's just different. And this is kind of, and I'm going to get into a more structural presentation because that question kind of wraps up basically a lot of the core doomer arguments. Um, First of all, 2007 is a bad starting point because net worths were artificially high due to a housing bubble that made people's home equity value worth more on paper than it was in reality. So starting from that point is unfair. And second, if you really wanted to go back to like the real peak, you're not being doomer enough. Like I'd say the real peak of real wages for the bottom 70% of Americans was probably in 2001, not 2007. The tech bust was kind of the when things started to and unwind, and there's other catalysts then, such as 9/11 and China entering the WTO, that I think kind of started. Most of the economic growth in the 2000s was very hollow, and I might do a video about um, the 2000s because like the stock market did okay and you had good GDP numbers, but it was distorted by a housing bubble that was in people and people using HELOCs to finance lifestyles they couldn't really afford normally. And then a lot of that legitimate economic growth was mostly in emerging markets, particularly China. This was the point, the 2000s, when China really started to accelerate and become a force in the world. And they had record levels of demand for commodities for constructing their cities. They had record levels of demand for consumer goods because a lot of them finally got into income levels where they could have a justified consumer society. And the growth of China and and result a lot of the other emerging markets who are supplying goods and services to China was kind of the bigger boom. Like if you look at emerging market stock performance versus S&P 500, they crushed it back then. And so if your idea of like the good times was China growing faster than everybody else and a housing bubble making Americans feel like they're wealthy, then your standards are too low. But not to be cheeky or anything, let's go into the actual argument I was going to make. First of all, economic hard times have always existed. Every generation has a narrative about why theirs is uniquely cursed. Like if you were born in 1920, you had to fight in World War II. If you were born in 1900 or 1895, you had to fight in World War One, and there was a lost generation. If you were born into 1950, you had to deal with a Cold War and civil unrest in your teens politically that was way worse than what is today. Like, you got to go look at 1968. If you 1968 puts, I would say 2020, which is the most politically fraught year in terms of unrest and distrust and all that, um, it puts it like in a completely different category. Like, so yeah. And if you were born in the 1970s and you were in a manufacturing family, you had to completely retrain or you would have had no job. So, like, this has been like a repeating pattern. There's a lot of negative survivorship bias in general. And this is what got me out of the doomer mentality. Look back at all the doomer predictions that have been made over the years, like in 2000, 2008, 2010, 2016, 2020, and 2022. Those were the most common years that I saw these, but there were a lot more. They were the same thing, like gold is going to go up to $10,000 plus an ounce. You have hyperinflation. People are going to live like third world people in the United States. There's going to be a civil war, end of the world. The stock market's going to go down 80 to 90%. And I was a big believer in a lot of this stuff in the early 2010s, particularly. I graduated from college shortly after the financial crisis, and a lot of this stuff felt really real. And a lot of the early YouTube economics people I watched were some of the most hardcore doomer economists that they would put on TV or had big enough a platform that they'd actually be able to upload on YouTube. And so you got all of those, things going on back then. Is it felt more real. Like, yeah, the unemployment rate was double digits almost. You had significant recession, and you had basically a bunch of college grads who couldn't find any jobs. Is actually way worse than now in terms of unemployment for young people. And despite all that, the doomer outcome never happened. So yeah, that's kind of my take. And keep looking back. Try to read doomer predictions and just search like in web archives or historical records of like the world ending or the economy ending or everybody's life always being worse. That it's a common recurring theme in human history. There's also a selection bias against not giving credit to alternative pathways versus like for career, I'm talking about particularly, not social pathways. We give too much credit to alternative social pathways. That's pro drift. But in terms of career, they don't really give enough credit. Example would be like, look, you grew up in a world that's saying, oh, you just need to finish high school and then you can get a job at a factory making 80,000 to 100,000 in today's income. So that was the path. And if you didn't adapt to the world and kept on that path, you would be severely underemployed, if not unemployed, and in poverty today. And now, like today, we have the white collar version of that is you go to college, and if you go to good at college and you study hard enough, you should have some boring white collar email job that pays you $120,000 a year for some flashy company. That hasn't really worked for a long time, but that's the message that has been sold. And the thing is that there are a lot of other ways, because there's a lot of people who are creating wealth. And there are people who are getting employed to higher paying jobs. It's just that you can't, and by the time a path becomes formulaic and mainstream, it becomes too competitive and it's difficult to win. It's like any other supply and demand in a capitalist economy in that way. You have basically, if there's a default path that is perceived as like the safe and guaranteed one, you're going to have competition. There's an impossible trinity, which I explained this, I think, in another video of jobs and career. You can pick, there's three things you can pick: high compensation, low risk. So like you have a low chance of getting fired or losing your job, and, or having a down year in terms of income. And, what's it called? It was, yeah, let me think of this. It was high paying / prestige, safe, and lack of competition. Those are the 3 points of the impossible trinity. You can only realistically pick 2. If a job is well paying, whether financially or in terms of social prestige, and is safe, there's going to be a lot of competition. Look at, for example, all the people who scramble to go to law school or medical school or compete to work at like the McKinseys of the world or the Big Fours or the investment banks, even if the Big Four doesn't pay as well as some of the others. But that's like the example. Those have lots of competition. The people who are spending all day, all night studying really hard to get a perfect GPA and hiring people to help them write their cover letters for these jobs, et cetera, et cetera. That's the cost if you want like the of high security and high prestige. But yeah, that's another example. Let's say example of a job that has low security but high pay and prestige. That would be something like a business development for like a software company, or working at a trading desk, or or entrepreneurship. If they are high pay and have not too much competition, but the reason why they don't have too much competition is because they're not safe. You can lose your business any day if market forces change. If you have a bad year on a trading desk, you will lose your job. If you have a bad year as a salesperson, fail to make your quota, you lose your job, or you just have a lower income. Or if you're a realtor and you don't sell any houses, you're not making any money. So, like, those are examples of that second part of the Trinity. And then the third part of the Trinity would be something that is safe but and low competition. And that would be things like working for the government, or relatively low paying jobs. Because, like, if it was safe and high paying, you'd have a lot more people competing for those jobs. So the reason why nobody wants them is because they don't pay. And yeah, so that is kind of the Trinity of career. And so if you're trying to chase the path that's supposedly safe and high pay, you're going to expect a lot of competition. And also, when and like any other market, when you have a lot of competition for a certain corner of the market, more labor supply means lower wage power, because wages are just the intersection of supply and demand in the labor market. So and so as a result, there's this the college educated white collar path has been somewhat decimated, and it might be more so due to AI. But that doesn't mean there's not other paths. Like, for example, like on an inflation adjusted basis, people in the trades are probably doing better than they did 20 years ago. There's also a lot of opportunities if you're more entrepreneurial or creative, working in like tech, or starting a business, or being more in the front office business development side of a company. Like, those are not conventional career paths, but there are options. Like, risk is generally what is underpriced. Yeah, that's somebody right. Seems like a better idea to take risk, but people don't want to take risk. People want like a safe life that they can coast. That's and the biggest doomers are people who want to have a safe life that can just kind of coast through and be comfortable. But AI and robots are punishing low agency people. That is something that is valid. Coasting is really no longer an option. I don't think it really has been one since 2000. And historically, outside of extreme eras of prosperity, or if you had inherited wealth, coasting was never an option. Like, a lot of these halcyon days that people were dreaming about, living standards were materially lower than today. Like, that guy in the 50s who go in a house, his house with a wife and 3 kids was only 900 square feet. And it was on a small plot of land. It wasn't really like today. Like, the quality of things such as cars are better today, electronics are better today, even food quality is better today if you can, like, on an inflation adjusted basis, especially. Like, food adjusted for inflation has gone down from like 10 to 12% of a family's budget to about 3% on average in 2025. And so, yeah, there is lower quality food, definitely a cheap processed food. But if you were willing to spend the same percentage of your budget as somebody in the 1950s did on food, you would have much higher quality food today than somebody in the 1950s. Same thing with clothes. Clothes have gone down from the mid-teens as a percentage of people's budgets to low single digits. And people complain that clothes are low quality today. And a lot of them are, especially at places like fast fashion outlets. But if you were willing to spend the same percentage of your budget on clothes as people did back then, you would have better quality clothes today. Um, so that's what's it called? That's um, what's it called? My take on a lot of that stuff. And what I'm looking at is economic data. I'm not really looking at what my percentage of budget I spend on food. It's consistently, according to the St. Louis Fed, um, about 3%. And I will share that with you guys, the chart, if you are curious. Um, but that's what's it called? The next question, really, I would have to say is now let's go back to my point on the doomers. I got a little off topic with there. And then median, and I'm not going to go too Steven Pinker on you guys here, but median real income, life expectancy, especially for those who are not consuming recreational substances, and material living standards are higher today than in the golden ages that people are referencing. Every industry that is not messed up by government regulation has been resulted in cheaper and better outcomes. The ones that haven't, which are housing, education, and healthcare, are the most interfered with by the political system. Like the reason why housing is expensive in most of these places is because the government and NIMBY voters basically don't allow people to build. Like in any other market, if there's a supply shortage, you can build to cover the supply shortage. Whereas in housing, you can't because political forces stop developers from doing so. In countries where they don't have developers stopping it, like Japan, you don't have this problem. In red states, you tend to have less of this problem, like Texas. Like Austin's rents made a complete parabola. They went way up shortly after the pandemic, and they've now at the same level now they are pre-pandemic because they allowed supply growth. Same with places like Minneapolis and a lot of Midwestern and Southern cities. Whereas in California, they don't allow it, and certain other markets they don't allow it, and so as a result, you have prices continue to go up, and people or just stay elevated because there's only so much of a percentage of people's budget people spend on housing. And I might do a video on this. Like, if rents got above a certain percentage of people's income, homelessness becomes cheaper, and all the social and economic costs of being a transient becomes cheaper than renting an apartment. So that is my take on that. And I might go dive into it. Like another question really that is an extension of that is, why are there no favelas in the US? And you think, oh, that's a ridiculous question, but think about it. If things were that dire and people really couldn't afford housing, and the government was so weak to enforce things, why wouldn't you see just more makeshift places built in like the hillsides of LA? But again, I'm still doing my research on this, so I'm not going to get too big into it. And yeah, I'll have to make a correction. Food at home spending was a little bit higher than I thought. It's not 3%, it's about 4.9. And here's the USDA data on that. But it's still a lot lower than it was in the 1950s. That's why going out to eat, like in the 1990s when I was a kid, going out to eat was a luxury. Like maybe you'd be able to go once every couple weeks. Now, most young urban professionals go out to eat multiple times a week. And it's not because they're so much wealthier today than yuppies were in the old days. It's because the real cost of going out to eat has gotten cheaper in the 30 plus year time frame. I'll say that Like fast food restaurants here in California, particularly, have spiked a lot. It's gotten to the point where I can go to like a casual sit down restaurant and the lunch specials at a actual sit down restaurant of higher quality food is cheaper than going to a fast food restaurant that is lower quality because of California's wacky wage laws and other regulatory policies against fast food. And so that is a whole another kind of can of worms. But the point being is going out to eat has become more affordable as well. That's one example of something. And in general, most problems in Western countries, especially in the United States, are not or are structural, but they're not so structural to the point that it requires a systematic collapse to solve. They are solvable if the political will is there to solve them. Like the example, actually, even though I'm not a fan of a lot of the pandemic policies, the pandemic, when people thought there was a real crisis, Congress got together and got things done. Even if I think their solution was bad, if people perceive the problem to be big enough and dire enough, it will be solved. And almost every major problem in the U.S. in terms of its economic system and cultural system is drawn from a political problem that there is often no will currently to solve. And if it got bad enough, I think the political will would be there to solve it. The other thing I'd like to talk about debunking the doomer in general is that the internet has democratized access to information, markets of all kinds, and audiences that have created entirely new wealth pathways unavailable to private cohorts. And I'm not talking about content creation. I'm talking about things like e-commerce. I'm talking about businesses that are built online, or you have a regular goods and services business, but now you can easily reach out to the whole world. Like pre the internet, you literally would have to have a national chain of retail outlets, or distribution agreements with retailers or office spaces all over the country. Whereas now you can handle that online. A lot of automation software too makes things a lot more efficient. I, for example, have a nationwide client base for my RIA Spearhead. If it wasn't for the internet, that would be impossible. It'd be extremely difficult for me to have any clients outside of Southern California. Whereas the internet, people can find me, or people who move can still have enough contact with me personally that they would want to maintain a client relationship even if they no longer are in the state of California. So that is one example. And it's not just finance. It's like a lot of other businesses and things that used to require a person to do, like a white collar job, whether it's like keeping track of what a CRM does today, or automated billing software, or software that can help with HR things, or even Google Calendar. All those functions used to have to be done by a person. And for email, you'd have to literally go to the post office or send things physically. It's just the frictions have gone down. And as a result, there is a lot of opportunity for people who are creative enough to strike on it. Maybe the doomer problem is that there's just naturally a large percentage of people, I don't know if it's a majority or just a sizable minority, who just do not have the agency or creativity to go and out that. And they want, and that as a result, they will struggle. But I think with educational reform, you can make that a higher percentage of the population be able to thrive in a more agentic world. I think in general, the other thing is that geographic mobility is also very underutilized arbitrage against structural headwinds. Like you can now either move to places that are lower cost or better quality of life, a lot easier to afford due to the combination of awareness through the internet and cheaper travel and more frictionless travel. You can relocate operations of your businesses to more cost-effective places, whether domestically or offshore. Um, yeah, what's it called? You can also go and look at, um, you can have a more globalized job market too, as long as you speak English and have useful, like replicable, useful skills. You can have a lot, you can open yourself up to a much larger market too. And I think that geographical arbitrage in general is still underpriced to this day because people do not like friction and complication. I know I've passed up on a lot of good opportunities in my life and career simply not being willing to move. And so there is that opportunity um, there too. The other thing is in general, um, victimhood framing is in generally a wealth destruction mechanism. Like if you have grievances and you believe everything is rigged against you and you cannot achieve, you will, it's not like there's not some spiritual woo woo reason that you will fail. It's more that you will, since you are just externalizing all your problems instead of internalizing them, you're not going to try to think of solutions. Um, and I think a lot of the doomer content helps justify that to a certain degree. Um, and also, a lot of people who've made it in supposedly easier times were grinding too. Like, I don't even think I've made it yet, to be quite honest. And I've been grinding away at basically the last 15 years to get to where I'm at now. Um, like, even like the example being with the YouTube channel, the first 3 years, nobody watched this channel. I had 2,500 subscribers a year and a half ago. And look at where we are now. Uh, like it's business and entrepreneurship or just anything that is really worth having is often difficult to achieve. And it's like pushing a snowball up a hill. Or I'm actually more on a flat surface. Like at the beginning, it looks like you're doing nothing, but your efforts compound over time. And even if it's compounding at a small rate, to say like 10% a year, 10% a year over 7 years means that you've doubled your output. But people don't really have the staying power often or don't really see it in that way. And then the other thing too is that even if there are policy or structure headwinds, there are ways to navigate around those or find better solutions too. And this is not, a lot of the doomer problems now are not unique. Like basically since the industrial revolution, this has been an issue. Like pre-industrial revolution, you could theoretically, if you were born the son of a blacksmith, you would be a blacksmith. Your life wouldn't change very much. You would die a blacksmith. Your kids and your grandkids would be a blacksmith or a farmer or whatever role you had in society. But once industrial revolution happened and you had more freedom of movement of people, and as well as market forces destabilizing old lines of work and the disruption cycle of creative destruction began, no career path has really been safe for more than 2 generations. And like that's kind of the like example. Like look, the white collar model of going to college and getting a good office job is only 2 generations old. It lasted, say, from the 1960s to 2008, so about 48 years. So a little over 2 generations. And before that, the blue collar union labor manufacturing path, that was maybe from like 1890 to 1980, or not even that, probably shorter. I think by the time the unions actually gained real progress was the end of the progressive era. So say like 1920 to 1980. So it's maybe 2 generations, maybe 3. And then and it keeps going. And like the frontier, before that was the frontier people. Like like if a city got too crowded, you'd move out west, get a homestead, and build a farm. And basically, between when the West was really fully able to start getting settled, which was maybe like 1820 to about 1890. So you got about 3 generations. The point being is that, and yeah, I know white collar office jobs have been around since the 1870s, but the fact that they were only accessible to a very small percentage of the population before the 1950s. So that's my point. So like mass access to like a predictable career path, and it has been shrinking every time. Like the next one is like, oh yeah, you go learn to code, get a high paying job in big tech or a software developer until you can either start your own company or have a comfortable retirement through stock options in your company, your big tech company. That lasted only about 10 years, that model, maybe 15, one generation. So that is the thing that the doomers have right, is that the half-lives of each of these models is shrinking over time. So, all right, here's a comment. Nah, man, a single income allowed families to buy homes and send kids to college. Now even 2 incomes make that difficult. Yeah, I mean, there is some reasons for that. And like, but the thing is that, again, that single income did live a lower standard of living, and college is something, as education is and housing are 2 assets manipulated by the government. Like if you didn't have the government backing unlimited student loans, like you wouldn't have tuitions as high. The example is with this recent Big Beautiful Bill Act. Once you had a cap on student loans, particularly for law school tuitions conveniently started dropping. They price it based on the amount of money that the max limit for borrowing and try to pass that down. And if you got rid of the government guaranteed for student loans, college prices would go down and collapse. They're already declining. College, adjusted for inflation, has peaked in 2019 in terms of tuition unaffordability. And that's more due to just demographic factors rather than structural reform. But I think there will be forced structural reform in that too. But yeah, I think that you are right about housing and education, particularly because those have been markets where supply has been manipulated, with demand being artificially raised through student loans in the case of college, and supply being artificially constrained by rampant NIMBYism. And the other thing really is that there's always people who in any distribution that underachieve, whether that is in a prosperous time or a not so prosperous time. And like, I think it might not be the most reasonable expectation really to expect a median person to have a better than median outcome. I think the goal for an economy is just that the median outcome gets better with every generation. But it's a basic standard distribution at a certain point. But overall, sorry about that. Where did I cut off? I know my service went down for a second. Where did I cut off on the live? But the bottom line really that I would have to say is for the doomers is that they were wrong for a few reasons. One, the track record of the doomer predictions haven't worked out. Even with the issues in housing, healthcare, and education, you've seen living standards consistently rise in developed economies, particularly the US. And again, I'm using it from an American perspective. I think it might make more sense to be a doomer in a place like Europe or Japan, or particularly the former Soviet Union countries, or even Latin America. But I'm using the US really as kind of the example here. US living standards have consistently risen. You have technology that has enabled a lot more opportunities for people that there have been previously. And you have also the idea that, what's it called? that in industries that governments have not interfered with to the point of being dysfunctional markets, you've had lower prices and real inflation adjusted terms for most goods and services. I know housing, healthcare, and um, what's it called? Education are the exceptions. Um, and that is the one exception I think where the doomers are might be right is the whole parole drift issue. Parole drift works because it's not noticed. It doesn't really feel like decline. It just feels like it's just like normalizing lower social quality of behaviors. Like when somebody's in poverty and actually has a real economic hurt, they realize it. Like, look, I need to fix this. Where if you have more social decay, it doesn't feel as painful. There isn't like an immediate need to like address the issue on individual or societal level. The mechanism for parole drift is pretty consistent. Asset inflation has outpaced wage growth, meaning that the same human capital produces less ownership each decade. Like the example would be is like a middle class income in 2025 often buys the same amount of assets as somebody from a lower middle class um, income before. And you have a combination of a bad education system and certain cultural disincentives for people to produce creates worse outcomes from the education system. And so people, when they graduate from it, have less skills than they should previously. And so therefore they have to have higher levels of credentials. So like a person who previously only needed a high school level education to do a good job now has to go to college. Somebody only needed a bachelor's degree previously now feels like they have to go to grad school. And it creates the credential treadmill, which accelerates it because people give up now and say, look, if I don't have an MBA or a law degree, I can't have a good life. And I think this is where a lot of the home ownership thing is. Like, people owning a home is actually a good way to combat against parole drift. Why do governments try to push women into the trades? I mean, there are female dominated trades already. So are you talking about like male dominated trades? Like hairdressers, for example, are more of a female leaning trade, or nail salons or things like that. So there are women focused trades already. Who cares if a TV's $100 and a mortgage is $2,300? Yeah. I mean, I think the housing thing is a real issue. I'm not really denying that. But in terms of like pushing him into male dominated trades, that just might be just like especially here in Canada. I think it's ideologically driven feminist sentiments for the Canadian case, or that there's an undersupply of tradesmen and they want more people to get in it to bring down the wages for tradesmen. One of those two is your answer. As for back to parole drift, people who don't feel like they have sort of ownership or stake in their society are more willing to be tolerant of decay, because they're like, look, if I don't own the property, I'm not going to be here permanently. I don't feel like I'm rooted in the community, and therefore I don't care if it declines. And that is a real consequence of a lot of this, and it could be a structural problem. And the parole drift serves the narrative for financial repression because it makes people who are moving down socially, from like the middle classes to the working and precariat classes, they still believe they are middle class because they're in the 50th distribution of income, when the percentage of people who are middle class is actually shrinking. And it hits the people who are like in the 50 to 100K income level the hardest, not the very bottom people. And so that leads to a lot of, again, when people think that their lives are more ephemeral and things matter less and have less stake, they tend to behave in more ways that imply that. And that goes into the whole parole drift, what's it called? Compounding. And speaking of parole drift, there was a guy a fan of ours from Kansas City who made a really cool website, which I'm actually going to do a video about in the future, called unprol.com, which kind of goes into the theory of prol drift and how to measure whether your activities are fighting against it or going along with the drift. I highly recommend checking that out. Yeah. So that's kind of my take on that. So that kind of wraps up my opening speech. Now we're going to go to Q&A. If you want to make sure your question is answered, please super chat, because I know I have a flood of questions to go through. I'm going to try to get through as many of them as I can. But we'll do what I can. And then after I answer this one, I will also make just a few like in-house announcements about things regarding the future of the channel. What's your opinion on indexes changing their rules in order to quickly include SpaceX after the IPO? Is this setting a bad precedent, or are times just changing with private companies getting so big? I think it's a mix of the two. If you want your index to actually represent like the current economy and the market, then you want to include these new IPOs. But at the same time, you're changing the risk profile inherently of the index. And a lot of people think that the S&P or the NASDAQ is like this safe index that compounds consistently and is through like solid blue chip profitable companies. But if you're putting in like recent IPOs of companies that are losing tens of billions of dollars a month, you are upping the risk scale quite a bit for an asset that people don't perceive that way. So I can see both sides of it. I don't have a super strong opinion either way, but it's a great question. And some people would cynically argue like, oh, this is just a way for insiders to offload their shares to people holding ETFs who aren't even voluntary buyers. That's another kind of concern built into this. So yeah, overall, that's a good question. And speaking of that, I have a few updates for the channel generally. First, if you want to see my short-term, my short form content that I don't post on YouTube because I don't want to flood this feed with shorts, you can follow me either on my my Instagram or on X. So like, and then we'll give you like my daily like short form content. Another update really is I do have like special members only content for people. It's only going to be about 1 to 2 videos a month, but things that are a little bit off the beaten path, say from the main content, or stuff that's a little bit too controversial to put on YouTube, like for the general public, I'll make members videos. Like example of that is one about is class being genetic. And also what's it called? And also my most recent speech in New York about why is old money invisible, which I recently posted about a few weeks ago. Another update is that the tour will be coming back. I am taking a 3-month break from the Analyzing Finance with Nick tour, but starting in August, I will be going back on the road for the Analyzing Finance with Nick tour. Our first stop will be in Denver, Colorado on August 8th. I will be in Santa Cruz, California on August 22nd. So for people in NorCal, that's probably your best bet. And then I'll be in San Diego on September 12th. And I'll be having a meetup here in Newport Beach, California on September 19th. So those will be where my next meetups. And then and I'll also be having private dinners for all of those except for Santa Cruz. So if you'd like to join us for one of the private dinners, please apply via the link below. And then the other announcement that I am excited about comes with the tour is that we are going to be having the international tour next year in 2027. There'll be two legs of it, one in late winter in Latin America in late February, early March. We'll be going to, for sure, we've got Argentina. We're going to have a meetup, and the dates on these are not set yet, but I know that they're going to be coming around that time in Buenos Aires. And we're also going to be having a special Latin American gala in what convinced me why going to your meetups is not pro. Well, because the crowd there isn't pro. It's high agency people who are actually looking to better their lives and or already in the process of bettering their lives. I mean, I've been to now over 40 cities, I think, for the tour now, and it's definitely not a pro crowd. It's very intellectually stimulating content as well. It's usually myself and occasionally a guest speaker will speak at our main speaking events, and they're very localized topics that are relevant. I mean, you've seen videos probably of my speeches. I've posted a lot of them on here on YouTube. So yeah, it's a good crowd. It's good content. It's a very lively discussion, especially the Q&A. So there's my case. And then we're going to have a special Latin American gala at a private venue in Jose Ignacio, which is like a suburb of Punta del Este in Uruguay. So I'm excited. And then we're also going to have a private dinner in the Paradise Island on the Bahamas in March. So if you want to go to the Bahamas dinner, apply to the link there. And we're probably going to have a polo event too, a private polo day in Uruguay when I'm down there. And then as for Europe, the only stops we have confirmed for Europe, we'll have London, probably in late May, early June. We're going to have a Swiss meetup in the suburb of Zurich called Wrapperswil. And we're going to have one in Milan in also in June, and Paris. The other cities, we have a lot of them actually. I have made Eventbrite pages early because I want buying the pre-sale tickets or your ways to vote to make sure I come to your city, because the logistics of me traveling out overseas is a lot more complicated than America. So I need to get a better idea of who is showing up before I confirm events. You can also vote in our voting form on where you want me to go, or you can participate, or you can buy tickets in our pre-sale. And here's a list of all the potential cities. Yeah. And so I'd love to see all of you guys. They've been really fun in the US and in Canada and Australia. And I look forward to expanding it out to South America, the Caribbean, and Europe. And we're also going to have special meetups when we break certain benchmarks. Like we're going to go to Quebec City and Montreal if we break 150K subscribers. And if we break 250K subscribers, we're going to go to Dorado, Puerto Rico. So that's kind of the update for the tour. And if you want to just follow what's going on with the channel in general, check out my Substack, Nick's Present Value. It's a mix of updates on new videos, events, and then direct like market commentary that I write occasionally on there as well. I'm going to do something about the AI IPO wave actually coming up. And the other thing to do is if you want to reach out to me directly with specific questions, feel free to fill out my consultation form or schedule a call via my Calendly. I think that wraps up all of the housekeeping news. Oh yeah, the other thing, this will be the last live stream that I do in this home office because I will be moving to a different place. And so the background will look different on future live streams. So if you like this background, savor the moment. If you don't, you should be happy because I'm going to be redoing the whole backdrop of the live streams and of the main videos too. We're going to be upgrading a lot of the stuff that we do in terms of content, in terms of film quality, sound quality, everything. So let me know what you think as I continue to improve the quality of this channel. It's something that I've taken your feedback very seriously. So that's kind of what's going on with there. So now that I've done all of the housekeeping things, let's get to your questions. I'm going to try to scroll through and read a few of your guys' questions. If you want to make sure I answer it and be on the top of the line, go to Super Chat. But I think I got, and if you, and still I recommend rewriting your questions anyway, because if you ask them earlier in the live stream, it's going to be hard for me to scroll up and find them because things get lost in the sea of comments. So if you have a question, whether Super Chat or not, please write it in now. All right. So, Nick, I hope as well. We had coffee in DC. Not necessarily a finance question, but what do you think of Massey's primaries loss as a signal of? I think it's a signal of a certain wing of the Republican Party having effective control over the party. And a lot of the new faction of Republicans voted for Republicans because they want Trump's agenda enacted. And so if you're going to be vocally against it, even if your principles are solid, like I don't have a problem with Massey. I probably would have voted for him if I lived in his district. But the problem really is that the median, like marginally informed voter, wants his policies to be enacted and fully, even the ones that may not make sense. So I think it's simply just that the party is kind of consolidated. And I think also the right wing of America is, and just in general, both parties are becoming more authoritarian and populist in nature. And also there's a lot of money that went against Massey. So that doesn't help matters. So I think it's kind of a combination of a variety of factors. And I think that this also signals that Trump's MAGA message is not as politically toxic as his critics think it is. Like, this might actually, the midterms, I think, will be a Democratic victory on the net, but they might not be as bad of a bloodbath as people anticipate, because the median conservative leaning, especially socially conservative leaning voter, is not really given up on this administration, despite some of the things going on in the world right now. Let's see, your opinion on U.S. debt sustainability. I already talked about that earlier. I don't think I don't think debt is unsustainable, because it'll express itself through higher inflation. Like, a lot of that debt has already been paid for through money printing, and whether direct or indirect monetized, like through QE and things like that. And so as a result, the national debt, and also I think inflation has been structurally higher the last 30 years. So the real value of that debt is, I think, significantly lower than it looks like on paper. Thank you for the super chat, Pufferfish. Unions kept the single income wages high. Most Americans depend on this. Now most unions are inept or corrupt. I have the right to be a doomer. Okay, you have the right to that opinion. I would disagree with you that unions are the thing that are the path to American prosperity, but disagreements make a market. I generally have no problem with unions existing if they have an equally valid adversary, like in the private sector. But I generally don't like public unions, because politicians who get donations from these same public unions are not a proper adversary to keep public workers' compensation in check. How can someone make sure their income goes up at a pace with or faster than inflation? Well, there's a few things. One, you need to make sure that you provide enough value and skill, and your skills remain on top, are still worthwhile, that you can negotiate with your boss to make sure that you get at minimum raises that are in line with inflation every year, if not higher. Or you can switch to a job to somebody who will, or you can become self-employed and build a client base and just raise your prices with your costs. Um, there's a lot of ways you can skin that cat, basically, but it's just making sure that you offer enough value that your prices go up along with the prices of other things, or if not more so. Ideally, you'd want to be beating inflation every year for your career until you're slowing down and getting closer to retirement. Um, so yeah, that's kind of my take on it. All right. Next, I don't know if some of these questions are aimed at you guys or at me. So if you can make that more clear, that'd be helpful. Because how would you rate access to housing 50 to 100 years ago versus now? Oh, it was a lot easier 50 to 100 years ago for housing. That's not really a debate. Um, Especially, well, it depends where. It's probably the same now in more rural or remote or second or like third tier or lower cities. It's probably better now, actually. But in, like, again, the desirable places where people actually want to live, yeah, it's a lot harder now because of two factors. One, the population is much higher in America now than 100 years ago. It's more than double, I think. And second, you have housing supply didn't keep up because of a lot of restrictions on development, and particularly in places like New York or California. Um, so yeah, it is harder now. I'm not denying that. And a lot of that also is because the cost of everything else has not gone up with inflation, that people can afford to spend a bigger percentage of their budget on housing. And that might be part of the problem, actually. That the fact that everything else, like manufactured goods, food, energy, etc., in real terms has gone down, people have a bigger percentage of their income that they can use to housing. So they use that money instead of saving it to bid up the marginal apartment building or house available for rent or sale. Um, yeah, that's kind of what's it called? In general, I mean, that's I think that's my answer to that question. Um, let's see. I'm gonna have to scroll up and see what questions I've. And I think a lot of the ones that were asked in the first 30 minutes are not on the screen anymore. Can it be fair that high inflation for 6 straight years is creating doomers? Yeah, but there were doomers when eras were not high inflation, like the 2010s as well. Um, so that's and there was less doom. So there's it's always, I don't think inflation is solely the driver of it, but I think inflation is the more focus of it. Um, let's see. What class does Nick support? Capital class or working class? Well, I mean, it's it's not really I support one class or the other. I generally want to support outcomes that maximize the overall growth of the economy and the overall advancement of technology and the advancement of society. That and like there's also two different types of capital. There's established capital and new capital. Like there are the professional independent classes who are trying to advance and move up, whether it's through capital of their own businesses or they're just starting to build their nest eggs, versus older money of inherited wealth or established money who just kind of wants to keep the status quo. I'm generally in favor of the independent classes and the professional classes and people who want to advance. And I'm biased because that's where my viewpoint is. I'm a small business owner who's looking to grow and continue to help people who are on the path to success or have recently hit success become more successful. That's like kind of what like I'm my business like a lot of doomers are profitable because their doom is a very easy thing to sell to people. Whereas I haven't like for an opposite interest. Like I want all of you guys to become rich and successful. If you guys all become successful and become on the rise, it means more of you will need to use my services in the future. So maybe I have a more optimistic bias for not really that reason, because whether your success is not really up to me. But when it comes to whether I support capital or labor, I don't think it's really that strict of a line. I support capital and labor who want to better themselves and want to advance and want the maximize. I want to maximize opportunity for the high agency people. Um, Whereas I think the more established classes of both labor and capital want to keep the status quo at the expense of growth and progress. So hopefully that answers your question. And that puts me, let's see, what is OC Grapevine saying about Senator Pratt? Do you think his policies would make a major difference in LA? I would say most people here are supportive of Spencer Pratt. We can't really vote for him because I don't live in Los Angeles, but I would say the common sentiment is generally supportive of him. And I think his policies would make a difference. I mean, the election of Hochman for DA a few years ago has resulted in a drop in crime in LA. So if we could have Spencer Pratt and Hochman, it could result in a major cleanup for the better for Los Angeles. And even though I personally don't like the idea of living in Los Angeles, I'm not a fan of it. I want LA to be successful, because if LA continues to struggle and fail, then it means that it's going to trickle down and lower the quality of life for people who live outside of its city limits and even in the neighboring counties, such as myself. So yeah, that's kind of my take on that. I think he seems like he's the best candidate running, even though it's the irony, because he's like a reality TV star by profession. So he's kind of like LA's Trump in that way. What's it called? Yeah. What is your opinion on below market housing as a means to stay in a high cost of living area to make more money versus moving somewhere where a house could be purchased by a less profitable area? Are you asking about the idea of whether I think that subsidized or low income housing by government mandate should exist, or if you moving to a cheaper place to stay in the same metro area on an individual level? Because my answer is very different depending on that question. Do you think SoCal housing will go back down to 500K? Maybe in nominal terms, I doubt it, but maybe in real purchasing power terms, there's a good chance it does happen. I think that you could see an era of like the 70s. Like if we're going to repeat light version of the 70s, which I said is my moderately bad scenario, you'll see wages mostly catch up with inflation, but housing kind of just stay the same price. Like in a world where a house costs $1 million, but the consumer price index goes up 100% in a 15-year period, that $100 million house in today's money is only worth about $400,000. So I could see that. I think it's a combination of that factor, and you'll see some nominal declines. Like Orange County real estate's down 5% from its peaks, 10 in some areas. I'm seeing news of rent cuts too in certain markets. So it like you can't squeeze blood out of a turnip, especially if immigration is going down and you have demographics the way they are. If there's no bid, you're just gonna, and the fact that property taxes exist means that there is vacancy cost. That the market will respond eventually. Let's see. So what is the move for young families who come from working class backgrounds and need to buy a home? The Doomer case is objectively represented through the collapse of TFR. This is a critical signal. Yeah, I mean, I think that decline birth rate is a rational signal that the median wage for somebody is lower than the cost of living. And I think that it is the birth rate problem will fix itself once housing becomes more affordable. I mean, it depends on if you're a working class background, what's your goal? Like you can Like, do you need to live in a high cost of living city to do what you're doing? And is there demand in a lower cost of living city to do what you're doing? I actually gonna do a video coming out next week with my speech in Dallas, which is about this topic. When does it make sense to move to a more affordable city? And it's not, you have to, there's hidden costs other than purely just taxes and housing costs. But it also depends on where your family's from too, which is a big factor on this. But yeah, you can move to a lower cost of living city and offer your services there. You can start a business to in your working class profession. A lot that's like the path for people in the trades to make money, is converting your trades into a practice. Like, that's a path. You can also, um, if you are in a high price level, you could just say, "Hey, look, it's only makes sense for me to work at this level, and if the market rate doesn't make it justified for me to stay here, you move." There's a lot of other, yeah, but those are kind of your general combination of things to do. Um, let's see, what's next question, I would say. When do you see housing becoming more affordable? I mean, I think we're in like year 1 or year 2 of like a 5-year bear market in real estate already. Like, um, it's starting to happen now. Whether it's going to be the slow bleed or the waterfall is to be determined. But usually, how these things work is it starts as a slow bleed and then it becomes a waterfall when there's an economic recession. Because an economic recession is what triggers a lot of real estate that's owned on margin, not margin, sorry, that has a high loan to value on the commercial side or from investors, and they can't make the interest payments with existing cash flow. That forces sales. Or when people lose their jobs, there's some foreclosure risk there. Or if the cost of necessities that aren't housing related go up, that there's just less money to bid for rents. Like, it usually takes like an economic shock or breaking point, like actual recession, not like minor economic shocks that we've had between 2022 to now. Like, if we have an actual recession, that's what would create, that's what happened with '06, the '08 crisis, which I don't think we're going to have a repeat of that because the banking system is a lot more stable now today. But you had 2006 housing market flattens. 2007, you have gradual declines. '08 is when the dam breaks and you get the waterfall. And then you have '09, 10, and 11, which are other years. And then it bottoms out in 2012. Historically, you have like 14 to like anywhere from 12 to 17 years of up years in real estate, and then a down cycle of 4 to 6 years. And this has been a pretty consistent pattern in places with relatively free markets of real estate. And I don't really see why it'd be any different this time. But honestly, I thought this would have happened by now, to be quite honest. Um, so yeah, I mean, if it that's so that's and I think that there's the whole demographic factor too. Um, but let's see. I'm gonna go back up to some of these other questions. Um, how long have I been on? 138. I'm gonna go on here for about 20 more minutes. So if you want to get on your questions, feel free to ask them now. Uh, I'm just trying to scroll through some of the old ones to see if I miss. What's the solution to the fact that the median income produces a lower standard of living? Well, you have to. The thing is that if there's the individual or the structural solution. I mean, the individual solution is you need to generate enough value to be above the median. The structural solution is that you're going to need to you need to increase the supply of the things that are keeping living costs too high on a policy and structural level. Like, you need to allow more housing development. You need to do a lot of deregulation of healthcare industry. You need to get rid of student loans and other subsidies that artificially increase education. You need to basically flood it's supply side economics, but instead of using the tax lever and giving people more money to buy stuff and generating growth that way, is that you need to increase the supply of things that are too expensive so that they become more affordable through a forced oversupply. It's like the example would be like, just even if the demand isn't immediately there yet, that's kind of really what would be the solution. That's how we solve the food thing. Is like, there's farm subsidies that the farmers. The reason why we do that is not because farmers deserve to have a certain high quality of life, and in anyways, most farmers break even anyway or less without subsidies. The subsidies are there so that you have a stable food supply, no matter how unprofitable it gets to farm. Like, we had a problem with the Great Depression, and I don't really like the idea of farm subsidies personally, but I'm just explaining the rationale here. Um, when the Great Depression, you had the Dust Bowl and a lot of problems where it became uneconomic to grow food, and food prices got too low that farmers would rather actually literally destroy the crops than put them in the grocery store. And the farm subsidies basically were there to ensure that that would never happen. And if we went into war or some major conflict or some shock, that food scarcity would not be an issue. And I mean, if you want to take the more extreme thing, you subsidize developers to build single family homes. I mean, I don't think that's a very crude solution. I don't think you need to do that. I think you need to just get rid of the restrictions that developers have for building single family homes, and you'll fix this problem. And it means you have to sacrifice the sacred cows of like environmentalism, for example, or NIMBYism, or keeping the or historical preservation, or keeping the character of a neighborhood. But you're going to have to break some eggs to make an omelet on these kind of things. I think there are smarter ways you can do it. You might need to be as crude as some attempts of ways but that's inevitably what you're going to have to do. Can you explain inflation expectations and how it affects real and natural, just neutral interest rates, and how it ultimately affects the economy? Well, inflation has gone up, but and you've seen this with the back end of the curve has gone up because there are fears that, whether it's due to higher energy prices as a result of the Iran conflict, but the market is, if you look at like the futures curves, it's looking like they think this is going to normalize eventually. Or I think it's that the combination is, whenever you do have too loose monetary policy or too strong fiscal policy, that extra impulse of spending eventually gets funneled into the housing market and creates inflation that way. But either way, higher inflation expectations, no matter what the cause is, investors realize, hey, wait, I need to make sure I get at least a neutral real return, if not a positive real return. I'm not going to hold bonds that are yielding too low, or I'm going to lose. So they'll sell, and then the new investors like, look, I'm not going to buy a bond unless if rates are high enough for me to get compensated for extra inflation risk. And so as a result, interest rates or if you want to fight inflation, the Fed's most obvious weapon to do that is to raise rates. And the market might be anticipating that the Fed will raise rates to attempt to fight inflation, even if the inflation hasn't got out of control yet. Or simply not cut. Like, the market was anticipating a lot of rate cuts on the back of Powell leaving and an otherwise declining inflation. But now, with the oil shortages in Iran and inflation anticipated as a result of that, you can't it's the case to cutting rates has been diminished greatly. And so as a result, the back end of the curve is steepening. And this is where the deficits come in. If people see high government deficits, they're like, oh, the government's going to have to print money to pay for these. And as a result, that might mean more inflation. And so as a result, I don't want to hold a bond that's going to generate me a yield that's not enough to compensate for that. And so, or that the Fed's going to have to raise rates to prevent the bond vigilantes from hitting hard. This is what happened in the 90s. Like people thought the deficits were getting out of control. And so these investors who are quoted as the bond vigilantes would just sell their treasuries because they're like, I don't trust that you're going to keep deficits down, therefore inflation low enough that I'll get a good return on this. So yeah, higher inflation expectations lead to higher rates, whether through anticipated Fed action or anticipated demand for a higher nominal return needed to justify the inflation. So to keep the real return constant. So yeah, that's usually how these things work. Thank you for the 99-cent super chat. Yeah, that's how do you justify paying California tax? Is it tempting to move to a lower tax state? Well, I mean, I think I justify it because I live in a particularly nice part of California. My quality of life is meaningfully better than if I lived in another place. Like if I was living, say, like in Fresno and or the Central Valley or the Inland Empire or someplace where I don't get the same quality of life in terms of weather or social trust or the other things I like here in Orange County, it's not worth it. Like, I feel like if you don't live within a few pockets of the state, you should just go move to a lower cost state. There also have my family is mostly all here. Like all of my immediate family lives within 1 hour's drive of me. So I would not really want to like throw that away. And I've made a real effort to mark my flag in this community. And I spent a lot of years just to get to do that and add value here and get to know everybody and develop a reputation. And starting over that from scratch would be very time consuming and very expensive. Like if you're like an internet focused revenue like business that's more like not dependent on relationships and not really dependent on being involved in your local community, then that might make more sense. If you live in and also like I'm fortunate I live in one of the nicer communities in California, and the quality of life if you have been to Orange County is very high. It's very. I've traveled all over the country for the tour, and I've been all over the world, 49 countries and all 50 states. That's what I did in Kansas City. That meetup to celebrate because Kansas was state number 50 and Missouri was number 49 for me, and it made me more appreciative of where I do live. Like it's a very high quality of life. I have a good community here. Weather is great. It's like there's a lot of like conveniences of things that I can go into a whole video of why I like living in Orange County, but it's very hard, I would say. So yeah, the other places that I would consider living if in California would be like Santa Barbara or San Diego or Montecito, particularly if I could afford it. The problem with Santa Barbara is just there's just not enough to do in Santa Barbara, to be quite frank. For somebody between the ages of 23 to 65. And speaking of travel and destination reviews, that's the other announcement I forgot. I made a second YouTube channel. It's called Nick AF. And this is a channel. I originally was just going to be like my offshoot content. But I've created this to basically give letter grades to all of the places that I've traveled to and a score of S to F on what is the most interesting. S would be like, I would move there or get a second home. And F would be avoid like the plague. I give A as like regular rotation. Like you should go visit every 2 to 3 years. B, I would go back in the right circumstances, but not a regular time, not a guarantee. C, worth visiting once. D, business trips and family visits only. E, it's not worth it. And F, avoid. So if you want my more like travel focused commentary that's not purely finance, but I do kind of bring my analytical and class and economic understanding to the analysis, check it out. The video I released today on this is about Santa Barbara, particularly. I did a review. My grade for Boston is a B plus, just for context. And the video I did record a video about Boston. I'll release it probably in a few months. Um, I think, and this is from the perspective of a visitor. I wouldn't live in Boston because you have to pay California prices for a much lower quality of life, especially in terms of weather. And then I'm having a video come out on New York City next week and Milan the week after. Um, but yeah, check out Nick AF if you want my reviews on places to visit, live, etc. Um, as for what are other places you would reasonably live inside OC, like in California or worldwide? Um, in California, San Diego is probably number two, actually. Like La Jolla, or not Mission Beach, but the neighborhoods of Mission Bay next to it, and not Pacific Beach. Coronado would be another one. Del Mar probably is pretty nice too, or Encinitas, North County, San Diego. Um, so like, yeah, um, like outside of California in the US, I mean, if I didn't need to travel or I didn't really want to get back to the West Coast, I mean, Charleston, South Carolina would be pretty nice, actually. It's just a little bit too small town for me, and mainly in terms of not being able to fly nonstop to the West Coast is a problem, and humidity might be intense. I've only been in October, and it was really nice then. Um, like Palm Beach County, Florida, if you're like in the part near on or within a mile of the intercoastal, like places like Delray Beach, Palm Beach, the nicer parts of West Palm, Boca. I've thought about that. Um, I think the summers are pretty bad there, but if I was going to move to a zero tax state, that's probably where I would go. Uh, yeah, if I had a tolerance for cold weather, I'd live in like one of the nicer suburbs of Chicago because I actually really like the city of Chicago a lot. It's just I can't tolerate the weather. That's and the housing is reasonably affordable there, especially for how much cultural amenities are there. So, um, yeah, that's kind of those would be, and then like Connecticut too is supposedly pretty nice if I wanted to be like near the New York hustle and bustle. Uh, or Scottsdale, Arizona. If I'd do a rotation, I'd live in the winter in Scottsdale and the summer in like Montana. Like that could be another like possibility for US. And then internationally, be Switzerland would be my top choice. Uruguay, Singapore, maybe Chile. And if I was retired and didn't need to earn an income, like Italy, coastal Italy or coastal Spain. But yeah, Cayman. I mean, but that's when it comes to next question. As from Swiss blood, why did you stop living in Swiss? Well, I wasn't born in Switzerland. My grandparents were born in Switzerland. My mom was the first on that side of the family to be born in the United States. So um, that's what I grew up here. My whole life is here in California. I've visited Switzerland 4 times for an average stay of about a month each, and I really liked going there. Um, and It's the weather is the problem. I don't like cold. I don't like snow. Um, and it's kind of a place you go more once you've already made your money, not really to get ahead. So, like, I would like to buy a vacation home in Lugano. That's on my bucket list of things to do because that's the one place it consistently doesn't snow. And I like the mix of like Italian culture in terms of food and Catholicism and all that with the efficiency and organization and tax regime of Switzerland. So if I was going to go to Switzerland and have a place there, it would be in Lugano. I actually would like to do a meetup in Lugano if there's enough of you guys would want to join me there. So it's a really cool city. Yeah. Like, why not a small town? Well, a few reasons why I wouldn't really live in a small town. It depends what you consider a small town. Like a lot of um, my friends who grew up in much bigger cities than me consider Newport Beach and Orange County to be small town, even though it's a suburban area that has a population of 3 million people. So, yeah, I wouldn't live in a small town for a few reasons. One, like if I want a family, the educational opportunities might not be ideal in a small town. Two, I want certain cultural amenities. And three, like in my climate preference, there aren't that many small towns in coastal California um, that fit like my ideal climate preferences. Like if I had, again, if a lot of these Midwestern cities had better weather, I would consider moving them there, to be quite honest. They're actually pretty nice. It's just that the snow is what draws me away from them. Um, and with small towns, you also just have a like it's also lack of it makes it harder to travel too. Like airport size is kind of a factor for me. Economic and business opportunities are also much more limited in small towns. So you have to either do long commutes or fly in into bigger cities to build your practice or your business, or have to rely solely on online means. Like if I was like full-time content creator and didn't need to talk to people for a living, maybe small town would make more sense. But that's and then also if the small town if you're not it's it brings back high school dynamics, and I didn't really like high school as this very small insular community, and like if you make a bad first impression right away, everybody's going to hate you, or people will spread rumors about you and all that stuff, and it can get toxic in a lot of these small towns with that kind of thing too. So yeah, that's a reason also why I wouldn't want to live in a small town personally. But it's mainly economic opportunities, climate, and lack of cultural amenities. Um, yeah. How can we get a similar home family dynamic to pre-industrial life in a post-industrial economy? Well, the answer to that is AI, actually. Um, AI is going to, and robots are going to allow the modern yeoman to emerge. Like if you're a family business, like with a husband and wife and a few adult kids, you could build with AI technology, the way it's progressing, a um, what's a like a multinational sized business with a small amount of staff. You can have robots do the manual work, and you can have AI do a lot of the white collar processing work or compliance or other things like that. We're not entirely there yet, but the way to get there is that every family is basically a family business that offers a specific niche good or service to the economy. And you would have more family to family interpersonal relationships that way, built on the back of technology allowing much more scale. The reason why we had to switch to factories, because factories and that more corporate industrial model was the only way to achieve scale that could generate enough supply to make products affordable. But now AI removes the requirement of mass hiring and giant amounts of capital to do that. So as a result, or lowers the substantially the cost of capital to do that. And so as a result, you can go back to a more pre-industrial idea where every family has a specific role in the community and provides a specific product or service to their local economy, or even a national economy or a global economy. Um, Hopefully that answers your question. Um, so I think that's the opportunity. I think that's the bull case for AI is it frees people from having to be part of the corporate industrial complex. Um, so let's see. I'm just going to see what other questions I have here. If I don't have any more, I might wrap this thing up here. A lot of the questions are the same. It's just like, how do I keep my income with inflation, or that, or housing, or stuff I've answered already. So why not advocate for better wages for working people? Why does everyone need to start a business? Um, I mean, the thing is that you can't artificially bring wages above what the marginal productivity of labor is. When you do that, that's just going to cause businesses to try to create technological workarounds or offshore to avoid hiring you. Like the labor market's like any other market. If you can do things on the margin to restrict supply of labor and increase demand, such as immigration reform and restricting particularly low skilled immigration. That's a way to drive up wages. But I don't. You're not gonna. It's not possible to get everybody to make $200,000 a year in today's purchasing power. That's just not real. Like if everybody had that, that would create inflation because you have more money chasing the same amount of goods and services. The goal is to increase real wages so you can have a good quality of life on a lower income. That's that's the solution. You can't artificially like increase wages beyond the market. It's just not sustainable. The reason why you had in the 50s a lot of high wages for lower skilled people is because the industrial and manufacturing capacity in the rest of the world was destroyed by World War II. So there wasn't any foreign competition. And then you also had the Soviet Union and the communist countries create closed autarkic societies, and that further reduced competition. And the situation is not the same. And honest work with your hands can be entrepreneurial. There's plenty of tradesmen who build practices. So I don't think it's solely a blue or white collar thing. Yeah. I think that what developing countries now do, you think that, thank you, Iona, for the super chat. And thank you for the stay hydrated thing. I don't really know what, if there's a meme behind it or anything like that I'm missing. But I do need to drink some water. Thoughts on the economic future of Northern California? I think it'll underperform on a relative basis. I think it's AI. I think it's going to be kind of like a lighter version of Michigan. Like you'll still have a lot of big companies headquartered there, kind of like the big three are still headquartered in Michigan. But it's just so much cheaper to hire development talent in other places. And the high cost of living is the same effect that unions had for the Rust Belt. It's going to artificially raise the minimum wage to get somebody to work there to the point where it makes sense. And I think I did a whole video about this called San Francisco is the next Detroit. That goes into my full thesis on Northern California if you want it. Are mathematical skills a cause of corporate success or of effective having those underlying principles? I don't understand what you mean by that question. Yeah. What makes you see AI ends being yeoman rather than a small number of capital owners supplying to a government-supported demand base? Because if that was the case, how did these other emerge? Like generally bigger companies tend to be slower to adapt and they leave holes for smaller competition to come in. That's historically like the example, like if this wasn't the case, like how would like Anthropic and Perplexity exist? Shouldn't Google or Apple have made that or stamped them out of business before they had a chance? And those are extreme examples, but that's generally how it is. Smaller companies are faster to adapt or have more incentive to innovate. And I think you will have one of the implications of a more populist government is I think you'll have stronger antitrust, which I think you need stronger antitrust if you want to maintain a competitive society in the era of post AI. And yeah, and also the main beneficiaries of AI are smaller businesses using it to leverage. Like it it's more likely to allow a smaller company to compete than a bigger company to maybe save I don't know, 2 to 3% of their bottom line on headcount cut. So the marginal benefit for it benefits the yeoman smaller person over the bigger one. Back on the trend of debunking the doomer, how can smart people improve the world after they've gotten their money? There's a lot of ways. I think the biggest way, and this is the example I've seen that's gotten the most results from local philanthropy that I've seen here, is donating or is donating to schools or financing the creation of new schools, but not just blindly writing them a check. You audit their curriculum and their teachers and make sure that they are actually fixing education in a way that is aligned with your values. Like, I think the days of just blindly giving money to a charity are over, even if they were ever the case. In the age of the internet, you could just have way more transparency for this kind of stuff. And if I was a very wealthy philanthropist, I would start independent schools and or finance the Catholic or donate a lot to the Catholic school system, but put my stamp on the curriculum. Like, if you want to fight prole drift, the best way to do it is to start at the education level. Like, you need to bring back schools that enforce anti-prole behavior. Like, that's education is really, I think, the biggest. And I'm talking about mainly K through 12 level education. By the time of college, it's too late. And plus, Harvard or Stanford or even my school doesn't need any more money for their endowment. Like, that is where I think would be the most effective way to do it. The other ways you could, if you had the, you could literally, I would hire somebody to find who are the struggling members of your community and give them help conditionally on them making material improvements of their life. That's very time consuming and probably not that efficient, but you might be able to do that within your local community. Um, and like, that might be another thing I would say to do, but I think schooling is probably the best way, or charitable causes you really care about. Like, I'd probably put money towards autism or research for medical. I think medical research to help longevity or fix things like autism. That's a cause I care a lot about. Or other physical or mental health ailments could make the society a lot better. So like, just, and it's a more broad based. It's not just targeting like one group of people, but I think medical research and education. And I just think, and I'd probably just support Catholic charities due to my faith bias, and I think that they do a good job with things too. But that's kind of how I would do. Might the 2060s be better than the 1950s? Oh, I definitely will. Like, I think the 2030s will be better than the 50s, and a lot of ways the 20s is better than the 50s. I think the best decade we've had for the bottom, say 50% of Americans, is the 1990s, not the 1950s. I think the 50s are the wrong comparison point. But yeah, I think so. How the anti-interest comes about, I think it's already started to come about, though. You just have people realize, hey, wait, like, there are a lot of smart people who've written books about this very thing. I think there's a guy named Jonathan Tepper who wrote a book about how antitrust and lack of enforcement is a root of a lot of there's too many structural monopolies in society. And I think it's just people. I think eventually, if the problem becomes big enough, and there already were people in the antitrust parts of both the previous and this administration who were more serious about cracking down on AI. It's already starting to happen. Consider speaking at the University of Dallas. Yeah, I mean, if there was, I mean, I'm gonna come back to DFW probably on my way to the Latin American tour in February. I haven't decided the location for it. If the University of Dallas would want me to speak, they can reach out to me. So I'd be open to it. But yeah, it'd probably be about that time. How can you afford a home in 2026? Either move to a place that's cheap enough that you can buy a home, or you need to, again, increase your income, whether individual or combined with your spouse, if it's a dual income household, to a level where it makes sense. And I don't know what level that is because I don't know where you live. So, and I don't really know what this is a more personal situation question. And if you want to help with personal situations, such as like how to save for a house, I recommend reaching out to me directly through my consultation form. Let's see. People who are good at math are often good at rigorous abstract thinking without unnecessary emotion. Maybe that's what you're thinking of. Let's see. Yeah, I think I'm going to wrap things up. I'm losing my voice, and it seems like the questions are slowing down. But thank you guys all for coming, and thank you guys all for watching.